Assalamualaikum. My name is Nur Syosati Muhammad Syukri. My matrix number is 01-AB21F2001. I'm going to present about the background of the company. The background of Padini. Padini Company's history began in 1917 as a small garment manufacturer. Over the years, it expanded its operation and entered the retail sector, establishing itself as a popular fashion retailer in Malaysia. In the 1990s and 2000, Padini continued to expand its retail presence not only in Malaysia but also internationally. Padini became known for offering stylish and affordable clothing catering to a diverse customer base. The background of Patsen. Patsen Holding PhD is a Malaysian-based company which is engaged in operating and managing department stores. The store offers well-known international brands, occasion and lifestyle-related merchandise. Patsen operates its business in segment namely selling and others. It carries its retailing business in four geographical areas including Malaysia, China, Myanmar, and Indonesia.
Assalamualaikum warahmatullahi wabarakatuh. My name is Ms. Shazlana binti Baharudin. My matrix number is 01DIB21F2005. Now, I will continue this presentation. My part is analysis ratio for Padini companies. First calculation is liquidity ratio. First is current ratio. RM1,003,926 ringgit divided by 2,762 ringgit. So the answer is RM3 ringgit 62 cents. The second is quick ratio. So 1,003,926 ringgit minus 136,302 ringgit, and then divide by 227,962 ringgit. So the answer is 3 ringgit 82 3 ringgit 82 cents. For the next calculation is activities ratio. First is inventory turnover. So RM611,584 ringgit divided by 177,963 ringgit 5 cents. So the answer is 4 ringgit 56 cents. Next is average collection period. So the conclusion is 56,460 divided by 154,103, and then times 360 days. So the answer is 132 days. Next is fixed asset turnover. So sale is 154,103 divided by 468,890 ringgit. So the answer is 35 cents. The last one is for this calculation is total asset turnover. So RM154,103 divided by 1,464,031 ringgit. So the answer is 10 cents. Next calculation is leverage ratio. Firstly is debt ratio. So 602,981 ringgit divided by 1,464,031 ringgit. So the answer is 40 cents. Next is return on interest ratio. So the 2,500 205,110 ringgit divided by 90,210 ringgit. So the answer is 10 ringgit 68 cents. And the last is debt to equity ratio. The answer is 602,981 ringgit divided by 891,050 ringgit. So the answer is 68,000. The answer is 68 cents. Liquidity ratio. First is net profit margin. So the answer is 150,708 ringgit divided by 154,103. So the answer is 75 cents. Next is gross profit margin. So the answer is 7,530 ringgit divided by 144,103 ringgit. So the answer is 3 ringgit 30 cents. Next is operating profit margin. So 473,984 ringgit divided by 154,103. So the answer is 3 ringgit 8 cents. Next is return on asset. So 150,708 ringgit divided by 1,464,031 ringgit. So the answer is 8 cents. The last one is return on equity. So 150,708 ringgit divided by 891,050 ringgit. So the answer is 30 ringgit. The last one is bond valuation. First is price earning ratio. The 32 ringgit divided by 22 ringgit 42 cents. The answer is 1 ringgit 37 cents. The second is dividend payout ratio. So 60,448 ringgit divided by 150,708 ringgit and times 100. So the answer is 0.22%. The second last is earning per share. So the calculation is 1,150,708 ringgit minus 0 and then times to 1,326 ringgit. So the answer is 87 ringgit 26 cents. The last one is price to book value. The answer is 32 ringgit divided by 120 ringgit 81 cents. So the answer is 2 ringgit 50 cents. The Paxton analysis. First is current ratio. Current ratio is 2,480,689 divided by 2,539,324 ringgit. So the answer is 95 cents. Next is quick ratio. Quick ratio is 2,480,689 ringgit minus 386,831 ringgit. So divide by 2,539,324 ringgit. So the answer is 80 cents. Next is activity ratio. First is inventory turnover. 1,442,532 ringgit divided by 385,351 ringgit 50 cent. So the answer is 4 ringgit 50 cent. Next is average collection periods. The amount is 418,085 ringgit divided by 2,280 ringgit 80,058 ringgit divided by 360 days. So the answer is 793 days. Next is fixed assets turnover. So 280,058 ringgit divided by 4,452,630 ringgit. So the answer is 5 cents. The last is total asset turnover. The amount is 280,058 ringgit divided by 8,892,757 ringgit. So the answer is 2 cents. Next is leverage ratio. First is debt ratio. 6,439,692 ringgit divided by 8,892,757 ringgit. So the answer is 4 cents. Next is return on interest ratio. 160,330 ringgit divided by 64,298 ringgit. So the answer is 1 ringgit 70 cents. The last one is debt equity ratio. 6,439,692 ringgit divided by 2,253,965 ringgit. So the answer is 68 cents. Now I will continue is profitability ratio. First is net profit margin. 1,340,787 ringgit divided by 2,080 ringgit 58 cents. 58 ringgit. So the answer is 650 cents. Next is gross profit margin. 1,480,055 ringgit divided by 2,080 ringgit 280 ringgit 58 280,058 ringgit. So the answer is 6 ringgit 79 cents. Next is return on asset. 1,340,787 ringgit divided by 1,464,031 ringgit. So the answer is 60 cents. Next is return on equity. 1,340,787 ringgit divided by 191,050 ringgit. So the answer is 1 ringgit 50 cents. Then last but not least, operating profit margin. 473,984 ringgit divided by 280,058 ringgit. The last calculation is bond valuation. Price earning ratio 20 ringgit 69 cents divided by 10 ringgit 49 cents. So the answer is 1 ringgit 21 cents. Next is dividend payout ratio. 5,371 ringgit divided by 1,340 ringgit 1,340,787 ringgit times 100. So the answer is 0.401%. Next is earning per share. 1,340,787 ringgit minus 0 and divide to 4,625 ringgit. So the answer is 289 ringgit. The last is price to book value. 20 ringgit 65 cents divided by 1 ringgit 24 cents. So the answer is 10 ringgit 20 cents.
Assalamualaikum and hi to everyone. My name is Amira Syahira binti Muhammad Jumaid. My message number is 01-IB21F2025. So today I would like to present about ratio analysis comparison between Padini hard disk Bahat and Paksan hard disk Bahat. Based on liquidity ratio, a current ratio for Padini hard disk Bahat is 3.62 while Paksan hard disk Bahat is 0.95. So Padini hard disk Bahat has a good ability to meet its short-term financial obligation rather than Paksan hard disk Bahat. Second, a quick ratio. Padini hard disk Bahat is 3.82 while Paksan hard disk Bahat is 0.80. So Padini hard disk Bahat has better the resources to pay its creditor when payment are due rather than Paksan hard disk Bahat. Secondly, activity ratio. First inventory turnover for Padini hard disk Bahat is 4.56 times while Paksan hard disk Bahat is 4.03 times. So Padini hard disk Bahat is better than Paksan hard disk Bahat. This shows that Padini hard disk Bahat has good in managing its inventory to convert it rapidly into sales. Average collection period for Padini hard disk Bahat is 132 days while Paksan hard disk Bahat is 793 days. So Padini hard disk Bahat has a better ratio in terms of average collection period. It is because a high average collection period could indicate trouble with their cash flow. For fixed asset turnover, Padini hard disk Bahat is 0.35 times while Paksan hard disk Bahat is 0.05 times. So Padini hard disk Bahat has a good value than Paksan hard disk Bahat. That means Padini hard disk Bahat has efficiency in managing its fixed assets in generating sales. For the last is total asset turnover. Padini hard disk Bahat is 0.10 times while Paksan hard disk Bahat is 0.02 times. So that's mean Padini hard disk Bahat has a good value rather than Paksan hard disk Bahat. That means Padini hard disk Bahat has efficiency in managing its assets in generating sales. Thirdly, based on leverage ratio, debt ratio for Padini hard disk Bahat and Paksan hard disk Bahat has a same value of the debt ratio, which is 0.40. For return on interest ratio, Padini hard disk Bahat has a better percentage, which is 10.68 than Paksan hard disk Bahat, which is 1.70. For the debt to equity ratio, Padini Holdings Berhad and Paksan Holdings Berhad has a same value of debt to equity ratio, which is 0.68. Fourth, based on profitability ratio, Paksan Holdings Berhad has a good ratio in terms of net profit margin compared to Padini Holdings Berhad, which is Paksan Holdings Berhad has 6.15, while Padini Holdings Berhad is 0.75. Next, Paksan Holdings Berhad has a better value of gross profit margin than Padini Holdings Berhad, which is Paksan Holdings Berhad is 6.79, while Padini Holdings Berhad is 3.30. Next, operating profit margin for Padini Holdings Berhad is 3.08, while Paksan Holdings Berhad is 2.17. Padini Holdings Berhad has a good ratio in terms of operating profit margin compared to Paksan Holdings Berhad. For return on asset, Padini Holdings Berhad is 0.08, while Paksan Holdings Berhad is 0.98. So Paksan Holdings Berhad has a good ratio in terms of return on asset compared to Padini Holdings Berhad. Last but not least, for profitability ratio is return on equity. So return on equity for Padini Holdings Berhad is 0.13, and for Paksan Holdings Berhad is 1.50. That means Paksan Holdings Berhad has a good ratio than Padini Holdings Berhad in terms of return on equity. So last, for the ratio is point valuation, that include price per earning ratio, dividend payout ratio, earnings per share, and price per book ratio. So we're gonna move to price per earning ratio first. Padini Holdings Berhad has a high price per earning ratio, which is 1.37, which is considered as a good. For dividend payout ratio, Padini Holdings Berhad has a better dividend payout ratio, which is 14.22% than Paksan Holdings Berhad. For earning per share, Paksan Holdings Berhad has a good earning per share than Padini Holdings Berhad, which is Padini Holdings Berhad is 87.26, and Paksan Holdings Berhad is 289.90. Last but not least is price per book ratio. Padini Holdings Berhad is 2.50, and Paksan Holdings Berhad is 10.20. Paksan Holdings Berhad has a better value of price per book ratio than Padini Holdings Berhad, which is 10.20. So that's all from me. Thank you.
Assalamualaikum and hi. My name is Naisha Nazira binti Nahisham with matrix number 01 DIB 2F2023. Now I will continue with the recommendation for Padini, Concept Store and Paksan Malaysia. I will start with the summary of the financial analysis. First, liquidity ratio. Padini Concept Store has a higher current ratio and quick ratio than Paksan Malaysia. This means that Padini Concept Store is better able to meet its short-term obligation. Second, activity ratio. Padini Concept Store has a higher inventory turnover and fixed asset turnover than Paksan Malaysia. This means that Padini Concept Store is more efficient at managing its assets. Third is profitability ratio. Padini Concept Store has a higher operating profit margin and return on asset than Paksan Malaysia. This means that Padini Concept Store is more profitable than Paksan Malaysia. Last but not least, bond valuation ratio. Padini Concept Store has a better price per earning ratio and dividend payout ratio than Paksan Malaysia. Paksa Malaysia has a better earning per share and price per book ratio than Padini Concept Store. Now we move to the recommendation. For Padini Concept Store, we suggest it to continue to manage its asset efficiently and profitably. Padini Concept Store also need to improve their return on equity by increasing financial leverage. For Paksa Malaysia, we suggest some advice such as improve its liquidity ratios by making over-term loan and increasing sales through promotions. Improve its activity ratios by making more efficient advertising and improve its fixed asset turnover by increasing revenue. Paksa Malaysia also need to improve its profitability ratio by lowering labor costs and increasing the average order value. For conclusion, Padini Concept Store and Paksa Malaysia are two retail companies in Malaysia. Padini Concept Store is a homegrown Malaysian brand that specializes in casual wear for men, women, and children. Paksa Malaysia is a subsidiary of Paksa Retail Group Limited, a Hong Kong-based retailer that operates department stores in Malaysia, Singapore, Indonesia, and Vietnam. The financial analysis of Padini Concept Store and Paksa Malaysia show that Padini Concept Store is in a better financial position than Paksa Malaysia. Padini Concept Store has stronger liquidity, activity, and profitability ratios. However, Paksa Malaysia has a higher net profit margin and return on asset. The findings of this financial analysis are relevant to Islamic economic and Islam finance in several ways. First, the study provides evidence that Padini Concept Store is a financially sound company that is managed according with Islamic principles. This is important because Islamic investors are increasingly looking for investment opportunity that compatible with their religious belief. Second, the study identifies some areas that Paksa Malaysia can improve its financial performance. This information can be used by Paksa Malaysia to develop strategy to attract Islam investors. Overall, the financial analysis of Padini Concept Store and Paksa Malaysia provide valuable insight into the financial strength of two publicly listed companies in Malaysia. The findings of study are relevant to Islamic economy and Islam finance can be used to inform investment decisions.